Bloomberg is now on your dashboard. With Apple CarPlay and Android Auto, it gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. It's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers.
Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast.
We want to bring in Bloomberg TV's David Westin for a conversation on the life and legacy of Henry Kissinger. But first, we want to bring you part of David's discussion with Bloomberg Opinion columnist Neil Ferguson, who wrote a book on the life of Henry Kissinger and spent extensive time with him. Here's part of their discussion on the role Kissinger played in the Yom Kippur War.
For Kissinger, the moral imperative in the Cold War was to avoid World War III. And that was one of the reasons that he pursued a policy of détente, of understanding, of improving relations with the Soviet Union, because I think reasonably he thought the worst possible outcome for the world would be a hot war between two nuclear-armed superpowers. And so in practice, when he entered the realm of power as Richard Nixon's national security advisor, I think he remained an idealist, but an idealist who was having to deal with some extremely difficult choices between, as I've said, greater and lesser evils. So I don't think the idealism was ever entirely eradicated. Certainly working with Richard Nixon, you were working with somebody who saw himself as a very tough realist, who wasn't afraid to do very difficult and even nasty things. So I think there was an element of compromise just in accepting a job with Nixon. But once Nixon has gone, it's very interesting to see Kissinger under Ford shift in a much more idealistic direction. And a lot of Kissinger's later career, about which one hears much, much less, owed a lot more to his earlier roots in German idealism.
That was Bloomberg Television's David Westin speaking with Bloomberg Opinion columnist Neil Ferguson. I want to bring in David Westin right now. David, thanks so much for joining us here in our Bloomberg studio here. What a life. It's been your life, my life. Yeah. That has been U.S. diplomacy, whether it's official or non-official. It's been Henry Kissinger.
Yeah, he's been the only diplomat I'd ever heard of, frankly. I mean, when he first appointed, I was in high school, actually. Yep. I'm old enough to remember that when Richard Nixon appointed him. But, and as Ray Dalio actually just posted something saying this, you can't think of anybody who studied history as deeply as Henry Kissinger did. As an academic at Harvard, he would have had a distinguished career in that, and then lived the diplomacy and was responsible for it, and then got to know pretty much every world leader, and didn't just know them, they hung on his every word. And that's China, that's Soviet Union, that's Anwar Sadat, and Egypt, around the world. I mean, it's quite extraordinary. If you read his book on leadership, he goes through the 6 leaders that he had respect for. He starts with Charles de Gaulle, whom he knew personally. And he goes on to Konrad Adenauer, whom he knew personally, and Maggie Thatcher, things. It's really an extraordinary life.
Wow.
And David, you knew him personally as well. So maybe if you could tell us a little bit about some of your memories with Henry Kissinger and what you'll think of him most.
Yeah, I would say, I'm not sure Henry would say this if he were here, but he sort of adopted me when I came to New York in the mid-90s. I think he took pity on me and took me under his wing, and he used to invite me to breakfast that he had with like 20 people or so at a club where he'd have visiting dignitaries in, people he'd known through the years, where we'd have an off-the-record discussion about what was going on in Asia, in Europe, in the Middle East. And it was wonderful. It was a wonderful experience. And so he really, and I had lunches with him where he was a teacher forever, and he wanted to teach you, and he had an amazing mind. You could agree with him, you could disagree with him, but he had thought it all through many times, and he could explain to you how everything was connected to everything else. It was utterly fascinating. Last thing, he was a huge dog person.
Really?
He and Nancy loved dogs. I mean, you can't believe they always were with a dog constantly. And he was a charming, actually very warm man in many ways.
It's amazing. What did he think of what's happened, not just in the United States over the last 5, 6, 7 years in terms of the nationalism, America first in the U.S., but Brexit in the U.K. and the elections? It seems like internationalism, which I think you and I kind of grew up with post-World War II, is not necessarily the leading role or the leading thought here in international relations these days?
Well, these are my words, not his, but I think he would say it's dangerous. Mm-hmm. We have to remember, he came out of Nazi Germany, fleeing it in 1938 with his family as a Jew. And he studied in his work, he started with post-Napoleonic Wars, putting together Europe and talking about the balance of power with people like Metternich, that he really valued as a way to avoid war. He wanted to avoid conflict at all costs. And I think he would say, if we were here today, there are real dangers in everybody going to their respective corners and fighting one another. People get hurt that way. And in fact, he talked about this just last month. Was the last time I saw him. He appeared live at the Al Smith dinner here in New York. Okay. And he gave a speech on this very subject, warning people about the dangers that we have in front of us if we keep going this way.
Well, one of the bigger parts of his legacy was, of course, brokering the peace in the Middle East, and certainly harkens now to what we're seeing between the war in Israel and with Hamas. So did you speak to him more recently to know what he was thinking as far as the conflict now, or what you might imagine he would have to say thinking about this current conflict?
Yeah, I don't want to be so presumptuous as to speak with him for him, but I think he would definitely say it's very different in many respects. The attack was different. Hamas terrorists going in and slaughtering children was different from a surprise attack from Egypt and Syria into Israel. At the same time, there are some parallels because what happened there, if you remember, is Henry Kissinger with President Nixon came in strong on the side of Israel and shifted them a lot of weapons and material and support in the United States. But then there was a pivot where they started saying, Israel, you got to back off. You can't go too hard against Egypt. And in fact, at one point, he really intervened very forcefully because he was concerned that if Israel tried to destroy one of the armies of Egypt, which they could have done, that the Soviet Union would come in and there'd be a shooting war and we'd end up with U.S. against the Soviet Union. So he actually played a key role in saying to Israel, you've got to back down. And he had some real conflicts with Golda Meir at the time.
Yeah, and of course, Israel is getting different pressure now to back down, not for fear of Russia coming into the conflict, but kind of similar to what we're seeing now in that sense.
David, some of the criticism of Mr. Kissinger, maybe as it relates to human rights and his pursuit of global diplomacy, what he would say, what I've read, I'm making some hard choices here, and some of the hard choices might result in some human rights being violated in various places around the world. How did he deal with that, or how did he talk about that?
Well, he did talk about it, and I would say he would deny this. I would say he was a bit defensive, particularly about things like Cambodia.
Right.
But you can't talk about the legacy of Henry Kissinger without talking about some of the controversy with Cambodia and the so-called secret war, with what happened in Chile with the coup, what happened in Argentina, and even what happened in Pakistan. But I think, and Walter Isaacson also wrote a book about Henry Kissinger, quotes Henry, quoting a version of Goethe that basically said, if you make me choose between injustice and order and justice and disorder, I will take injustice and order. I think which comes partly from his background, because he saw what disorder in World War II in Europe could do. And so he did make some tough decisions. I'm sure he would say there's such, and he would say, look, I can't say I was right. Tell me what would have been better. Give me what the better alternative would have been. At the time, that was the one that would preserve the most order that we could have.
When we're thinking back now to the war that we're seeing in the Middle East, and current Secretary of State Antony Blinken, he's gone out to Israel to speak with the officials over there. Do you think that there would, speaking onto how you think that the current Secretary of State can really, what their role is in this conflict and how it's different from Kissinger's role back at the Camp David Accords?
Yeah, ironic, isn't it, that we're seeing shuttle diplomacy, even as we speak right now, with Tony Blinken over there in Israel and going to Ramallah, going to the West Bank and trying to keep things under control as much as they can. It's ironic. It's very difficult because, for those of us who are around, Henry Kissinger was larger than life. He dated superstar models and things like that. And he was on the front page of the paper all the time. And he had such a powerful position at Nixon. I'm not sure there are figures anywhere right now that loom as large. But I think what we're seeing from Secretary of State Blinken and from President Biden right now is a version of what Henry Kissinger tried to pursue, which is basically, let's talk to all the parties, figure out where the interests are, find the right balance, and keep things under control. Even if we can't come to an overall solution to the problem, let's manage the problem and try to minimize the damage and, yes, the loss of human life.
David, Mr. Kissinger was one of the architects of détente with the Soviet Union. What were some of his thoughts about the rise of Vladimir Putin and kind of what we're seeing from Russian activities over the last decade or so?
Well, he obviously, I suppose, thought that was very dangerous and very risky and a much different situation to what we've had before, in part because actually Russia today is not as powerful as the Soviet Union was then. I mean, if we think back to that Cold War, I mean, there were two superpowers that are squaring off. If there are two superpowers today, it's China and the United States. And Russia is a smaller player, which in some ways makes it more dangerous because they feel they have less to lose and they feel that they have more to gain. And certainly if you read what Vladimir Putin says, he feels he was really done wrong. Russia was done wrong with the fall of the wall, and he's got to restore that prestige, which makes it more dangerous.
China, I mean, that's the new thing that, I mean, I can't imagine he's very happy with what's kind of chilled over the relationship over the last 4, 5, 6 years between the U.S. and China.
Well, perhaps his last international trip was to Beijing.
Very good.
Where he got to meet with President Xi personally when nobody else from the United States could meet with President Xi. President Xi wanted to meet with him. And you can underestimate the reverence that the Chinese leadership has and has had for generations for Henry Kissinger. Now, part of that is part of the culture. They really revere the elderly, people who have a lot of experience. I mean, it reminds me actually of Charlie Munger right now.
Yes,
Warren
exactly.
Buffett,
We were just saying that.
Where Charlie Munger said, boy, you can't a good executive, you keep him there forever. You don't turn him over for every 5 or 6 years. But the Chinese really revered that. But also, if you think from China's point of view, imagine where China was when he went there first and where it is now. And would it have gotten there? I'm not sure it would have gotten as far or as fast without Henry Kissinger and Richard Nixon, because it was Richard Nixon's idea. Henry Kissinger implemented it, but it was actually Richard Nixon's strategy.
David, thank you so much for joining us. David Westin, he is the host of Wall Street Week, which is one of my favorite brands ever on Wall Street. Wall Street Week airing both on the radio and television with his thoughts, his perspectives on the extraordinary life of Henry Kissinger, who passed away at the age of 100.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
I don't know if the cybertruck thingamajiggy's got Apple Play. We'll check in with our next guest, Dan Ives. He knows everything about this stuff. Dan Ives is a managing director, senior equity analyst, Wedbush Securities, and a Penn State rabid fan of note there. All right, Dan, I'm seeing the video of the Cybertruck. I just don't get it, dude. I don't see it. It's not a truck, man. I can't throw a bale of hay in the back of the truck.
More importantly, why are you carrying bales of hay?
Well, because I'm a rancher. Maybe I'm gonna get a wrench. You know, I'm thinking about that. I watch Yellowstone. So, Dan, talk to us about this Cybertruck. What's it mean for Tesla?
Look, this is important. I call it a historical event for Tesla and Musk in terms of this new category. 4 years in the making. I mean, you got 2 million reservations. Even if 40% of those convert based on our estimates, 800,000. I mean, this is going to be a new growth vehicle, obviously on the edge, the Mad Max design. But I think this is going to be successful. And I think, look, people like Miller, they're going to be driving this around New York.
Wow, Matt, I hope you're listening in to hear that one.
Well, he's not going to get his wife to sign off on this. He's got the Challenger with the Scat Pack. That's enough.
Well, we're going to have to see if it can strap in a baby carriage in the back. So that would be the most important for him right now. Dan, tell us what so you think this is going to be successful. Tell us a little bit about some of the projections you've run and just how, break down the numbers for us in terms of how this is going to play out for Tesla.
Look, the important thing today is about pricing, because that's really the unknown. We think pricing is probably sweet spot 60 to 70K, and that's important. You'll also get tax credit there. At that level, at scale, 2 to 250,000 per year as we get into 2025 in terms of units. Now, coming out, this is going to be complex to build. It's all going to be built out of Austin. That's where the launch will be today. But this is important because it goes back to, something we've talked about on the show a lot is a refresh. It's just more categories. It's part of the halo effect. Contrast that GM Ford pulling back a little on EVs, yet Tesla Musk actually doubling down.
So I think Elon himself has even said, Dan, that this kind of thing is, I guess in his opinion, kind of a profitability disaster, production disaster. It's so hard. Can you make any money on this truck? Is there any profitability in this truck?
Yeah, Paul, first 12 to 18 months, no. I mean, they'll essentially lose money. It'll be cash flow negative. But as you get into 2025, it actually could be pretty significant in terms of the accretive level as it all plays out at scale. Now, at 50,000 units, we think that's probably max 2024, probably about 40,000 in terms of what they'll ultimately deliver. But this is all about next 2 to 3 years. It's giving them their other growth vehicle. And I think this is really the start of just the next phase of the Tesla growth story. This is 4 years in the making in terms of today's launch.
Dan, tell us a little bit more about the competition that the Cybertruck is going to be stacked up against. I think, the Ford, F-Series, particularly the F-150, right? That's the best-selling truck in America, isn't it?
I drove the F-150 Lightning.
So the electric one there, sure. And then you've got the Ram, the Chevy Silverado. I mean, how's the Cybertruck, you think, going to stack up against those?
Well, F-150, I mean, that's the target on the back. I mean, they're really trying to go for some sort of churn there. You look what Rivian's done, the success. Now, they've had a lot of difficulty in terms of building it out. But in terms of success from a demand perspective, you look at that opportunity, you look at what we're seeing coming out of GM. Look, this is really creating a new category. But it's part of the halo effect. And I think the difference today, 4 or 5 years ago, everyone kind of viewed it as, okay, Tesla, they're not going to be successful. Today, there's not an auto manufacturer executive around the world that won't be watching the event, because you can no longer just say that it's not going to be relevant. It's actually the opposite in terms of they're leading in terms of really innovation technology.
Hey, Dan, when you speak with the folks at Tesla, when you also speak to the other auto manufacturers, what's the thinking today about maybe the ultimate demand curve for EVs over the next 5 years? It seems to have lost a little enthusiasm out there.
Yeah, I mean, look, I think it's no secret you've definitely seen a moderation. But I think the view among many in the industry is, okay, let's say it doesn't go to 50 to 60% penetration. Let's say it goes to 30, 40% penetration next 5-6 years. That's $2 trillion in terms of the amount of ultimately opportunity out there in terms of electric vehicles. So you continue to see aggressive push toward this. I think the big thing is price discovery. You're not going to have 80, 90,000. You need to be in that sweet spot, 40 to 50K. And that's what we're seeing in terms of that price war that's played out, well known in terms of what's happening in China. It's really price discovery. But finally, we're seeing some sort of supply-demand equilibrium. But I don't really see a pulling back. GM Ford, that's essentially UAW that really forced that hand to pull back a little in terms of some spending.
So speaking of the economics of this is a tough time right now to be buying a car and to be, persuading consumers that this is the time to be getting really excited about that when you have auto loan rates as high as they are. I mean, certainly the holidays, big time to roll out a lot of incentives on price and maybe rates if you can. But what exactly is the pitch right now to, financially, that people might be getting excited about this?
Well, the big thing, too, is tax credits. And I'd expect some more tax credit incentives as we go into 24, from Biden administration, because that's a key point. If you go back historically, let's call it 70, 80,000. Now you're getting some of these EV vehicles, especially for Tesla, Y, and others, 35, 40,000 when it's all said and done. Here, you're going to have incentives, but no doubt, because what we've seen from a rising rate environment, that's been a huge headwind that does start to reverse in 24. That's why the comps get easier in 24. And I do believe we are still going into what I view as a golden age for electric vehicles. And I think that's why it's important today for this event pricing. It's really going to be a flex the muscles event for Musk and Tesla.
Dan, the stock Tesla's up 97% year to date, clawing its way back to its all-time high that had a couple years ago. You've been, I would argue, one of the biggest bulls on Tesla, on EVs in general, and then by extension, Elon Musk. How frustrating is it for you to see yesterday, for example, another situation where Elon Musk really comes into the news in not necessarily a good way on a company that's not even related to Tesla? How do you and investors kind of deal with the Elon Musk risk factor?
Yeah, it's part of that spider web. I mean, even what we saw over X, and obviously, he went to Israel in terms of the trip. And then if you look at the interview yesterday, I mean, clearly there's going to be no champagne dinner between Musk and Iger anytime soon. I do think relative to Tesla, it is a bit contained relative to any sort of like brand deterioration. But as we talked about, I mean, Musk is Musk. He's going to go to the beat of a different drum. That's why you have the loyalists, but then of course the haters as well. And that's just, I think it's more accepted to some extent from a Tesla perspective. But no doubt, it's a fine balance between from a brand issue or any sort of deterioration. Right now it's contained, but it's not what you want to see yesterday, ultimately, as a Tesla holder.
All right, Dan, thanks so much for joining us. As always, really appreciate it. Dan Ives, Managing Director, Senior Equity Analyst at Wedbush Securities, a rabid Penn State Nittany Lion fan. We're waiting to see which bowl game Penn State will go to.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's get to our next guest, commercial real estate. Let's talk to Scott Kelley, founder and CEO of Aetos Capital Real Estate. He joins us live here in our Bloomberg Interactive Broker Studio. Scott, thanks and welcome to Bloomberg. Talk to us about commercial real estate. It is on everybody's mind, from anybody who thinks about real estate, commercial real estate, to invest in banks that have financed commercial real estate, to everybody else involved in the ecosystem. It is ugly out there. Is it time to dip your toe in there and start maybe buying some of these properties?
Well, I think it's uglier than even the headline news would tell you, because there's a confluence of events which has really never happened before. First of all, the level of commercial mortgage maturities over the next couple of years is extraordinary. It's like $1.5 trillion over the next couple of years. Second, it's a cyclical business, and whether it's a hard landing or a soft landing, it's a landing. We're not in a great part of the economic cycle. There are secular trends that are really powerful, whether it's work from home, shop from home, stay in an Airbnb, move out of big cities in the Northeast to the Sun Belt. I mean, there are powerful secular trends which are influencing the performance of different properties. And this interest rate spike has got an enormous impact on what's essentially a leveraged business, because you want to leverage out a lot of the return for the real estate to drive equities. And then I would say, lastly, the regulatory environment has changed. You know, the for a long time during COVID, it was sort of hands off. Nobody foreclosed on anything. There was a lot of leeway given to borrowers, just because that was the economic reality of things. That's changing as well. So all those things put together.
I'm not going anywhere near this space. You're just painting an ugly picture.
But there are going to be winners and losers, you know, and I do think it creates, like every disaster, it creates great investment opportunities, and you know, there are iconic buildings here in New York that are just going to be fine. You know, they're not going to, you don't want to see them going through the roof, but they're going to be fine. And you look at what office owners, as an example, have done. We were over at the GM building a couple weeks ago. They put in the Savoy Club, you know, which is really an amenity to tenants. If you go to One Vanderbilt, they've got awesome, you know, terrific restaurants and a Centurion Club. I mean, all of a sudden, you know, the owners, I think, of these iconic buildings are able to put things in to keep tenants. The disaster, I think, is going to be for the kind of B and C quality properties, which are going to have a very hard time retaining tenants. And
this is an A property, by the way. I don't care who's talking about
this.
This
is A
this
plus.
Is a great.
This is
where
we sit
best.
right now would not be.
All right, HQ not going anywhere.
On the A-OK part of this scale.
So relative to those B and C properties, we had Igal Namdar, president of Namdar Realty, in not so long ago, and of course his firm, he's best known for being a big buyer of zombie malls and going in at the lowest price. He's sort of doing the same playbook here in New York relative to the office properties because of exactly what you're talking about. Now, he was willing to put a value on the non-trophy properties. And he said, so if you go to a random building out here on 3rd Avenue, depending whether it's in the middle of the block or a corner, he said that it could go anywhere for 25 cents on the dollar to 75 cents on the dollar as for where it was before. Does that sound extreme to you, or does that match up to what you're seeing as well?
No, it does not sound extreme to me at all. I would say 25 cents is more likely, because you have to understand with the property taxes that and the operating expenses, particularly of these buildings in New York. When rental rates drop, you can have buildings that can't make any money. And I think that's a realistic prospect for some of these really bad buildings. So the question is, how low is low? And
25 cents on the dollar is low.
25 cents on the dollar is low.
So, something I've talked about a lot on this show here, Scott, is that I've been on this journey to buy an apartment in New York. It's provided for great newsworthy content for the show, as well as some stress in my own personal life. But something that has come up in this latest apartment that I'm looking at is that the commercial properties that are on the street level are right now perhaps not renewing the leases. And what that means then for the residential building above that owns this whole building and the income that they rely upon from these commercial tenants. So is that something that you're seeing as well, that like this distress in the commercial sector perhaps could have bigger implications for the residential side, which of course has a number of problems of its own right now?
Right. Well, yes, and I think the issue is the whole ecosystem has to work, right? If there aren't people in the office buildings, the guys selling sandwiches on the first floor are going out of business. If the tenants aren't in residential, buildings, it's very difficult for the ground floor tenants to be a dry cleaner, be a whatever that services the tenants. I think the big issue that people don't talk enough about, which has to be confronted, is it's going to take a long time to work this out, and it's got to be a cooperation between government and the property owners, and because people are going to need a break on property taxes, on zoning regulations and all that sort of thing. And unfortunately, good public policy, which would say get these buildings up and running, tend to be bad politics, because you're kind of giving money to people that are viewed as being wealthy and don't need it. That's not the case. I mean, the cities, I think in New York's one example, but I think you can talk about it in San Francisco and Chicago and anyplace else. If you don't have a vibrant real estate market, the tax base is just going to erode in the cities. And so it's going to take a thoughtful public policy approach to moving some of this office space to residential and other things, and that's New York's big problem, right? It's there's way too much office and there's too little residential, and so it's incredibly expensive.
Got to rezone it.
Well, and rezone, yeah, you've got to rezone it. You've got to give incentives to make those changes, and frankly, a lot of those kind of 70s style office buildings are not, particularly able to be renovated into residential. We did, the company that we're partnered with for our domestic effort here, did a redevelopment of an office building in Washington into residential, and it's worked out beautifully. But those opportunities it takes a lot of expertise and a lot of help with the government and patience to get it done.
So switching gears just a little bit, Scott, we've been talking to you about this epic opportunity in distressed office here in the U.S., but your real wheelhouse over the last 20 years, although I should add you were one of the big MDs at Morgan Stanley back in the day, so your wheelhouse is real estate, period. You have just such a broad base of knowledge. But you've done a tremendous amount of investing in China and in Asia. You were in China, I believe, back in September, and you told me privately that it's worse, similar to what you're saying about the U.S., that it's worse than what's being reported. So talk to us a little bit about China. And does that seep into the global economy? Does that seep into the U.S.? And when do we hear those headlines more so again?
Well, I think you're starting to see them now. I mean, the Chinese property companies, and again, we run a series of private equity funds. Most of our investing in Asia. We've been at it for 22 years. Most has been in Japan, but we did put $600 million of equity into China in a variety of basically joint ventures. residential joint ventures to build condominiums to sell. And we all remember the lines around the block of people wanting to buy these things. There are no lines there today. But the issue with these, this capitalism stuff's a little bit tricky. Right? and these Chinese property companies have gotten themselves run aground with terrible capital structures. And when I say that, they've got like 5 different branches of creditors. First are people that were buying condominiums that weren't delivered. Second were the construction lenders. When that dried up, they then borrowed money from sort of private funds that were raised in China. Then they went public in Hong Kong, and then they did high yield, bonds in Hong Kong. So, I mean, it's a big, big problem, and the Chinese government can fix it. It's going to take a lot of money, and it's going to take a lot of expertise. There's no Hank Paulson over there to say, give me a bazooka. I don't necessarily need to use it.
But she has pretty much indicated that he's not willing, or he's not interested in saving. So what would force his hand in terms of putting that money into the market?
I think it's a guns and butter issue. There's only so much money. What are you going to do? What are you going to do with it? And I think civil unrest is the thing that they're really worried about.
And we've seen some pictures of that.
Yeah. Hey, Scott, thanks so much for joining us. Really appreciate you coming into our studio. Scott Kelley, founder and CEO of Aetos Capital Real Estate. Historically, has been investing, as Scott mentioned, in Asia, mostly Japan, but also maybe take a look here at the U.S. And to me, it's the lipstick building on 3rd Avenue. When I see something like that trade, I can't wait to see what the valuation is. It could be a big, big haircut.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Subha Tatavarti joins us. She's the Chief Technology Officer of Wipro. Wipro is a publicly traded company, New York Stock Exchange. WIT is the ticker. $25.2 billion market cap. Stocks year to date up about 3.8%. So that's good news there. Subha, thanks so much for joining us here. Software company, artificial intelligence. Can you tell us kind of where your company fits in the tech stack? What do you guys do at Wipro?
So we are a technology services provider, and we serve 1,400 customers across 25 plus verticals across the globe. We are anywhere from managing cloud and infrastructure migrations to managing full cloud stack to application development to tech support to consulting and strategy consulting. So we are a full service firm. And I'm really excited to talk a little bit more about what we're doing on GenAI on this show with you.
Yeah, tell us about that. I think, this year it seemed like the biggest story in AI was, ChatGPT, and now it's going on with OpenAI and Sam Altman, a bit of a different development there. But tell us as far as investment opportunities for AI, what we can expect to see in the new year.
The way I see GenAI impacting, it is going to impact every business and every vertical and every technology stack. And we know this already. What is interesting is the categories that are emerging. I would specifically put GenAI impact in 4 specific categories. The first one is the entire SDLC process from software development lifecycle. Internally, we have been experimenting with this technology for the last 10 months, and we see 25 to 30% productivity gains. From requirements to testing to everything in between. The second area which is emerging is around content generation. The idea that you're able to reduce how much time it takes to create content, generate content is quite fascinating. And that's where we see a significant improvement in productivity gains. The third area we see emerging is this entire RPA 2.0, the entire idea that in the past it was around automation, but now it is mostly the new avatar or the reinvention of business process optimizations through generative AI. And the last category, the way I see it, is right now most of us have experienced generative AI through large language models, but applying the same architecture to other modalities, other datas, structured data, which will then start to impact these various layers in stack that I just referred to, I think it becomes quite fascinating. These are kind of the four trends I'm seeing I'm seeing emerging. And the application of these four areas will be fascinating, and we'll see what plays out in the next year, which will be very interesting.
Subha, we've heard some numbers from various technologists about the spending associated on artificial intelligence, on AI across a whole range of industries. From your perspective, how much of that spending, that AI-specific spending, is new incremental tech spending, or are they simply maybe taking their spending from another period of their place in their tech budget?
See, most of our technologists, we don't get a lot of budget. When I say that because we are very much tied. Technology is tied to our business outcomes. It's top line growth and bottom line optimizations and growth for us. What we tend to do is star the RTB and create the headroom, so to speak, and invest in new areas and new technologies. The idea here is productivity gains. The idea here is, how can I run the business smarter, more efficiently, with better predictability, so that I can generate those business outcomes. And when I look at it from that lens, it is quite interesting, the question, because the question itself is an answer, right? I mean, you won't get it. You always have the same pie. You'll just have to divvy it up in a ways that will generate value for business.
When we're thinking about AI, this is obviously such a rapidly evolving space. I would love to hear, Subha, some of the biggest lessons and takeaways that you had from 2023, and how you're going to bring that into the new year.
Specifically around Gen AI, our biggest learning has been that, and it's been a good learning, which is experiment fast and move fast. This space is evolving rapidly. The number of technology startups that we are investing at Wipro, we have a venture arm, and we also do a significant amount of work with startups, because that is how we create this robust ecosystem that will then offer the right solutions for our customer problems. We were rapid, very, very rapid in terms of investments. We announced $1 billion investment for our firm in summer. And the idea here is, you invest fast, fail fast, learn from it. And what is fascinating to us is, because of our investments early on, patterns are beginning to emerge. We understand that middleware, as an example, in this space, is going to be an explosive opportunity in 24 and 25. It is a very evolving space. What kind of stack would emerge out of Gen AI? The middle tier middlewares it's going to be fascinating. There'll be new startups and new companies born out of it with rapid adoption. And those patterns have to be recognized early on. And the only way you can do that is by experimenting and failing fast and making sure that you're able to invest at the right time.
Subha, talk to us about the risk here associated with AI, whether it's just data security, privacy, all those issues. How do you guys think about that?
We are a very responsible company. In fact, the very first tenet when we announced this investment is a responsible AI framework. And I see this as two side of a coin: responsible and innovation. I think it's going to be interesting in the next few months and years. And obviously, we all heard about what the U.S. government signed in terms of responsible AI framework and in terms of privacy and other implications. I think more regulations will emerge, but we specifically here, we're taking a proactive decision in terms of how we want to develop, adopt, and operationalize Gen AI-based applications. I think this is going to be more regulated into the future, because it is anchored on data and privacy. For instance, what kind of data sets was the model trained on? What is watermarking? How does it manifest itself? How do you ensure that the output from generative AI, when watermarked, what are the commercial ways of monetizing, basically, how do you monetize? So all these patterns will begin to emerge in the next 3 to 6 months. And I feel that regulation is catching up. In this case, this is the first time I've seen regulation catching up somewhat faster than in the past in other technologies. And I think it'll be interesting to see how the industry then shifts to accommodate those regulations and policy changes.
So last one here, real quickly, Subha. So Wipro, really big company. You guys have got like 245,000 employees based out of India. Tell us what the AI adoption is like over there.
We are an AI-first company. We are bound to be AI-first company because we play in the technology space. You're right, 250,000 employees, primarily based out of India, but also worldwide. We are a global company. And the very first thing we ended up doing was to make sure that we build our own internal generative AI platform for various use cases. We are slated to have all our 250,000 employees on the platform in the next couple of months as we roll out various use cases. We're also, again, very anchored in generative AI training. So we are in the process of training all our 250,000 employees in generative AI and responsible AI. Yes.
All right, Subha, thank you so much for joining us. Really appreciate you taking the time. Fascinating story there, fascinating discussion. Subha Tatavarti, Chief Technology Officer for Wipro.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.